Assalamu alaikum, Ramadan Mubarak. Thank you very much, Ismail, for your kind words and introduction. Today, we're in a very sort of unusual situation with the COVID-19 keeping people at home. I have been at home since early February. So I started staying at home, and because I was working on a paper, so that kept me at home. By the time I finished that paper, COVID sort of hit Kuwait, and we had to stay at home. So now I'm going into my more than 50 days of homestay. What I'm going to share with you, my journey, my experience through this presentation. This is not going to be an academic sort of presentation about Sukuks. As I have seen from some of the participants, some of them are actually in the academia. And this is not going to be a pure technical, structured finance kind of presentation. Because of the spirit of Ramadan, this is going to be more of a light-hearted kind of presentation, which I will be walking you through some of the concepts of Sukuk, why it's so special, and basically highlight some of the key issues about why capital markets are very important, which is the topic that is very dear and close to my heart. So we're going to go through some Sukuk definition, just to set the scene. Many people talk about, they say, well, Islamic bonds or Sukuk bonds. And I'd like to just differentiate between what Sukuk are in reality and what bonds, conventional bonds are. And the importance and the growth in the Sukuk market, the current market trends, talk about some of the sort of where the things are going, and the future outlook. I believe really Islamic finance as a whole is modern day's sort of contribution, Muslims' contribution to civilization. Why? Because through Islamic finance, it's more of a universal way of dealing with the rest of the world. It does not discriminate between people. And it's a way of spreading Islamic ways of doing business to the world. Plus, it offers an alternate way of financing. Okay, so people don't have to necessarily to only go to the conventional banking for their financing needs. So that's why Islamic finance is very important. The other thing is that if we look at when Islamic finance started back in modern day sort of 1976 with the establishment of the Islamic Bank, and then Kuwait Finance House, and then the rest. For that whole period, if you look at it as, I always look at it as 3 waves of development. The first wave is more concentrated on basic Islamic banking products, and mainly commercial banking. The Murabaha structures, the Islamic deposits, and so on and so forth. And that whole thing sort of continued up to early 1990s. And during that stage, we started seeing the second wave of development, in my view, which is when we started seeing Islamic investment banking, where a number of Islamic investment companies were incorporated, as they started offering investment products. They started going into private equity. They started doing funds, different funds. So they started developing investment vehicles for Muslims all over the world, and basically, and that expanded Islamic finance even further. The third stage is basically started with the new millennia, okay? That's when the first Sukuk sort of started growing. That's when we started looking at debt capital markets sort of taking shape. And this is the phase where we're in right now. So which brings us to our topic, Sukuk. So Sukuk, that's the pure definition. Sukuk as an Arabic word means sak, and the plural is Sukuk, and it's basically it represents an ownership share in an asset, basically. And in some research, they believe that the sak was the source root of European checks, basically, which basically transfers financial rights and obligations or money transaction. So Sukuk really is as a term, to me, it's more of a structure, a transferable paper, whereby you can exchange and invest through that sak. And some parts of the Arab world, they call the title deed to a property or a house sak. And basically, it's called sak al-mulkiya, for example. So it's the title deed. But we're not talking about that. We're talking more about a financial product here. So what I'm trying to demonstrate here is that something that I've always experienced when in the investment banking, when we used to have customers walking in and they say, yeah, we'd like to do sukuks, or we'd like to issue sukuks. And basically what they were trying to say is that we'd like to get some financing, we'd like to borrow. And they have no clue about what Sukuk is all about. And therefore, with this simple sort of diagram, I'd like to illustrate two things. One, Sukuks are not the same, of course, okay? And the way of looking at it is just like looking at any transaction with two layers of contracts. The upper layer is the Sukuk layer, which gives and entails and gives the right to the investor to invest, buy, or to divest, to sell his right in this transaction. Okay. The more important component is the lower part, which is basically where the transaction takes place. So when we talk about musharaka sukuk, or we talk about ijara sukuk, okay, or we talk about mudaraba sukuk. So the real transaction is in the lower part, which is where the actual transaction taking place, the musharaka, the mudaraba, the ijara. Okay, the upper tier or the upper layer of the structure is more about what makes this transaction tradable, which basically with this mere fact is that you get a group of investors coming and setting up a special purpose company, for example, in this case, and they would contribute their funds or invest in this SPC. So this SPC represents the investors in the transaction. And then the SPC basically goes and acquires an asset, lease it to the issuer, or basically engage in a musharaka or engage in a mudaraba. But the SPC is the holding vehicle for the investors, and that's what they trade. They trade in the shares of the SPC, basically. So that's what I wanted to basically emphasize. And when we talk about Sukuk, it's a dual tier structure. The most important is the lower tier, where the transaction takes place, and therefore the Sukuks are not the same in terms of obligation, in terms of characteristics, in terms of the way they behave, and that's very important distinction when we talk about Sukuks. Why Sukuks are important? Simply, they are tradable instruments, meaning in the old days, when we used to arrange for syndicated murabahas or syndicated ijara, the financiers, the banks, the investors would basically get engaged in this transaction, and they are locked into the transaction from the beginning until the end. So they cannot get out. However, with the Sukuk structure, okay, investors can, when they subscribe to the Sukuk, okay, after it's listed, they do have the right to exit and sell their shares, and basically don't need to wait until the maturity of the transaction itself. So tradability made it much more interesting to the investors. The Sukuks also helped many issuers to not only rely on bank financing, although still Sukuk markets dominated by banks in terms of arrangement. However, capital markets means the issuers can tap into the market without the need to go through the banking route. So with the Sukuks, it disintermediates the banking sector and gives the issuers the ability to access capital markets, which basically means for sophisticated issuer a lower cost of funding. It means that those issues of Sukuks can be rated by credit rating. And why is it important? A credit rating gives comfort to the investors about the creditworthiness of the issuer or the structure itself. When we talk about structures, when we talk about Sukuk structures, we can talk about structures that either rely on the creditworthiness of the issuer itself, or we can look at structured finance kind of Sukuks, whereby the Sukuk would have credit enhancements, which makes it much more, it has higher credit rating, which makes it more appealing to investors, basically, and reduces the cost of funding for it. So credit rating is something that you can find with Sukuks, and you can't find with direct lending in terms of to the same customer. This is a very interesting point, and it really applies more towards banks and financial institutions that are regulated by by central banks. If let me give you this example. If we have like a bank that's financing a client A, and the bank has two choices. One, either to lend it directly, finance it directly by establishing a direct ijara transaction with the issuer himself for, say, $5 million. And or at the same time, if the same bank would buy the sukuks of the same customer, if they issue 5 million, the capital adequacy requirements on the balance sheet of the investor would be different. So what I'm trying to say is that BIS regulations give sort of are much more favorable towards tradable instruments as opposed to direct lending. So sukuks fall into that category. Again, with credit rating, with tradable instruments, you are able to attract wider investor base rather than your local sort of banking environment. Okay, what are the sukuk types? I'm just listing here some of the more prominent and more important sort of sukuk structures. The ijara, the musharaka, the mudaraba, the istisna, the salam, and the murabaha. And when we look at these different sets of different structures and contracts, we're looking at mostly used. Most of the sukuks fall into the first three categories: the ijara, musharaka, and mudaraba. And we're not going to go into some of the fiqh and sharia aspects of them. But the difference here that we will be looking at is more about the tradability of those sukuks. And that's why the ones that are tradable, the ijara, musharaka, the mudaraba, it's because it has tangible assets or proportionate ownership of business of investment portfolio, which renders it to be tradable. The other ones are not tradable, and that's and then that's why one would start wondering, why would somebody go and issue sukuk if they're not tradable? Okay, because for investors to get financial benefit, they should buy it either at a premium or a discount. But for example, with structures such as murabaha or salam, you can only trade them at face value, okay, unless you get some kind of workarounds, and I'm not in favor of workarounds with those structures. And therefore, so the sukuks are either tradable or non-tradable, and the major sort of part of the sukuks that are in the market, they're ijara, musharaka, mudaraba. When we look at when we go a little bit towards the east in Malaysia, they follow the sort of certain fatwas which allows bitamin ajil to be issued and to be tradable. We are at a stage where, I mean, we can't say they're wrong or they're right. It's basically they're following certain rulings, mostly following Sharia, the Shafi'i madhab, and I will talk about the Malaysian experience later on in my presentation, and it's one that's very fascinating and led to the growth of the sukuk market as a whole. But anyways, so there's we have the Sharia, the sukuk types. I haven't seen much of actually istisna sukuks, to be honest with you. But the other ones are pretty much common. Islamic bonds, Sukuk bonds. I just prefer to call Sukuks as Sukuks and bonds are bonds. Bonds are basically debt instrument, and they represent a debt on the balance sheet of the issuer, basically. While Sukuk is more equity based, and that's a major difference between bonds and Sukuks. Okay, with the bonds, you're looking primarily on the credit risk of the issuer. With the Sukuks, you're looking more on the underlying sort of cash flows generated from the assets that are basically based on which the Sukuk were issued. When you price the bond, you price it on the basis of its creditworthiness, and that's why you have credit rating. So between AAA, AA, BBB, C, and D, there is a pricing discovery for each rating, and therefore, and with also take into consideration certain elements with regards to the geopolitics and of the issuer himself, then the pricing would be within that range. With the Sukuk, you're looking at also the pricing would depend on the asset value itself, and that's again another difference. When you look at the Sukuk, like say for example, take an example of Sukuk Rijara, leasing Sukuks. The asset would need to be insured. For example, if you look at an aircraft finance, it needs to be insured, it needs to be maintained, and there are related expenses to the asset itself. All of these expenses would affect the value of the asset itself. And therefore, it's different from when you issue a bond to an airline. You don't necessarily have to look at these sort of expense items. But when we look at the similarities between bonds and Sukuks, some Sukuks are structured pretty much as an imitation of bonds. Why? Because sometimes in order to attract some investors, especially non-Muslim investors, they try to structure it in a way where it's exactly mimicking bonds. And there are some reservations on this imitation, but again, just and that's why sometimes you see people calling it Islamic bonds. Again, both bonds and Sukuk, as we spoke earlier, they can be rated, okay? And rating is very important because it will help to attract investors who may not be familiar with the issuer himself. However, based on the strength of the rate, they would be willing to come and invest in such Sukuk. Credit enhancements, again, I just touched on it a little earlier on, that certain structures, they may get a rating of BBB. However, with credit enhancement, meaning if we can get a third-party guarantee, or we can have more collateralized assets to enhance the creditworthiness, it means the creditworthiness of the issue increases, and the pricing sort of and the cost decreases. And there is an element here of how much credit enhancement makes sense to be compensated by the pricing drop. So that's again something that needs to be weighed. Versatility, again, talking about the difference in the bond structures and the Sukuk structures. It's very much similar, again, as practitioners, when we look at any investment proposal, we look at the risk characteristics, and when analyzing that, whether to apart from the Sharia aspects, when we make our assessments to the risk characteristics of a bond or a Sukuk, they will be looking at the same risk elements: non-payment, defaults, changes in markets. All of these aspects and risks have to be addressed and looked at and analyzed prior to engaging or investing in either bonds or Sukuks. In reality, Sukuk reflects, in order for the Sukuks to be able to be tradable and attract, Sukuks are still a very small part of the global capital markets, and therefore the global markets, we use it more of as a benchmark to price the Sukuks. So therefore, Sukuks reflect conventional securities in terms of the pricing, because it has to be, it follows the same pricing. Otherwise, if it's off sync, then you'll be mispricing, so you either be overpaying, or basically, if you price it too thin, then you will not get investors coming in. So, well, if we take some historic look on how the Sukuk started. The first Sukuks have started in 1990 with a small issue in Malaysia for Shell, 125 million ringgit, which comes to around $30 million, give or take. So that was the first Sukuk. The interesting part of the Sukuk during those days is that people talk about it. There was a lot of literature about that has been written about Sukuk and tradable instruments, but not many sort of ventured into Sukuk issuance. And I remember during those times, we used to work very closely with the Sharia scholars. And all these sort of different developments in the market taking place, I have to say, it's all thanks to a deeper and closer understanding between Sharia scholars and practitioners. I remember we used to sit for long hours, whereby we try to explain the practical side of the transaction, and the Sharia scholars would help us and through question and answer sort of sessions to basically put it together in a Sharia compliant structures. And so that's how the evolution took place of the different structures of products in Islamic finance. And I think the Sukuk is the ultimate, in my view, in this case, of the development of Islamic finance products. Then in 1994, there was the first Sukuk Musharaka were issued by Tehran municipality with 43 million. Not many people talk about this Musharaka Sukuk, and it was a first. And they had actually a series of other Sukuk issuances, but predominantly they were local. And we've seen the markets growing from being 7%, for example, in Malaysia, for the Sukuk, growing within 1 year to about 25%. And today, it represents around 61%. It used to be higher, actually, but last year, the Sukuk market dominates the Malaysian debt capital market with about 61%. And the Malaysian market itself represent about over 60% of the global Sukuk markets in terms of outstanding issuances. Why is that? Because in Malaysia, the government has taken sort of a conscious step towards developing the market framework and making sure that the different components of the market are there in terms of legal framework, in terms of regulation, in terms of participants, and plus after the Asian financial crisis, I think Malaysia has taken a step towards strengthening the Malaysian financial system, relying on this Malaysian financial system. So a lot of the government deposits were actually kept with the Malaysian banks rather than foreign banks. So the Malaysian banks had substantial liquidity. Plus, one of the other things that very successful initiatives that have taken place in Malaysia was the establishment of a bank, well, basically a central bank stroke banks owned organization or a setup called Chagamas, which basically Chagamas is the equivalent of Fannie Mae in the US. It's a company that acquires the mortgage portfolios from the banks and securitize it and sells it to the investors. That actually made basically helped to develop a deeper debt capital market in Malaysia. So they acquire, they do issuances both in form of Sukuk, Islamic Sukuks, and conventional issues. And therefore, the Malaysian market has grown to be the leader in terms of size of the issuances, in terms of sophistication. And when we look at the global issuances, it grew from about 1 billion in 2002 to 34 billion in 2007. And last year, we had about 130 billion in new issuances last year alone. And you can have a look at this table, okay, and you can see a number of firsts in terms of first ringgit Sukuk, first Islamic residential mortgage, as Chagamas, I was talking about in 2004, first exchangeable Sukuk, and so on and so forth. So there has been a lot of sophisticated sort of structuring that has taken place in the development of the Sukuk markets to reach where it is today. And when we talk about Sukuk market, we talk about sovereign issues as well as corporate issues. So not only the companies have been very active in this sphere, I mean, governments have been extremely active there, and they started dominating the Sukuk markets in terms of size. So where are we today? The coronavirus basically has caused a slowdown in Sukuk growth for the short term. A number of issues have been have been delayed. However, that kind of situation, the COVID-19 situation, meant that a number of governments had to basically resort to additional expenses to fight off the virus, and a lot of expenses have gone into the healthcare system, and therefore additional expenses on the budgets of many governments have been incurred which basically push them towards looking at financing. At the same time, when we look at the oil prices since end of last year, it has dropped by around 60%, 50%. There's been a rebound in the last few days in the oil prices because of the agreement between the OPEC plus countries. However, these countries, many of these countries, especially Gulf-based countries, they have actually came into 2020 with budgets that had deficits. So the drop in oil prices, the COVID-19 meant the deficits only widened, basically, became larger. And therefore, we have seen, that there has been a growing need to borrow, and especially when we look at the current market interest rates have been dropping, so which basically meant it's a good opportunity for many sovereign issuers to go to the market. So we've seen in the last 3 weeks about over 25 billion in bonds, not sukuks, that have been issued by the governments of Abu Dhabi, Qatar, Saudi Arabia. The Dubai government issued 1 billion dirhams in sukuk, actually, during the same period. It just, so we can see that the trend in that direction. When we look at the sukuk markets, just to understand some of the characteristics of the market itself, I touched upon recently. The sukuk markets, unlike the bond market, it is relatively short. Well, it takes more of the shorter end of the spectrum. So most of the sukuks are either 5 years and 10 years maximum, okay? But very little goes beyond 10 years. It's because of the most of the banks' balance sheets, especially Islamic banks, the maturity profile of their balance sheets cannot go beyond. Plus, they don't have enough financial products to hedge and help them go into longer maturities. The ones that we see on the longer end are mostly project finance with identifiable cash flow and offtake agreements with the governments. So the risk there is pretty much calculated, and you'll see investors going into those kind of sukuks. However, the mainstream sukuks are pretty much between the 5 and the 10-year tenor. And when we look at the sort of the sector distribution, government's sovereign issues, as I mentioned earlier, dominate the most of the issues with 58%, corporates 24%, and financial institutions, which are very active in order to basically support their tier 1, tier 2 capital. They show a lot of sukuks, so 18% there. When we look at the size of the issuances between domestic and international, we can see, as I have mentioned to you, Malaysia is predominantly domestic, very little international. Saudi Arabia is again, 2/3, 1/3. Indonesia 50-50. UAE pretty much international. And so on and so forth. These are the most active players in the sukuk market, in the global sukuk market, in terms of size of issuances, in terms of number and size of issuances. As I mentioned, when we look at the share of Sukuk and fiscal deficit financing, over the years, Malaysia has been pretty much very active. Qatar, Indonesia followed. Indonesia is a latecomer. However, Indonesia has been basically well received in the market, and a lot of investors going into Indonesian Sukuks, and they have huge needs there. Again, the second graph also talks about the share of Sukuks in the total government debt. Again, it's the same thing. Malaysia, Sharjah, government of Sharjah, they are a very active and repeated sort of player in the Sukuk market. Saudi Arabia, and so on and so forth. Let's talk about a little bit about some of the new innovations in the market. Green Sukuk, again, we talked about the imitation with the bonds. Green bonds are very much sort of well known in the market, especially for ethical investors and so on and so forth. So Islamic financial firms are incorporating social elements such as environmentally friendly and sustainable practices to widen their appeal beyond the religious-minded customers, so expanding the market for them. And the Gulf and Southeast Asia plans to design Islamic bonds or Sukuk linked to socially conscious finance that could help mobilize large pools of assets across the Muslim world. So green Sukuks are basically Sharia-compliant investments in renewable energy and other environmental assets. They address Sharia concerns for protecting the environment, basically. Proceeds are used to finance construction or to refinance construction of debt or to finance the payment of government-granted green subsidy. They may involve securitization of future income cash flows from ring-fenced projects or assets within specific criteria. While there are many opportunities for green Sukuks in the solar energy, they have significant potential for renewable energy, for sustainable developments, plus have significant requirements for investments to protect themselves from impact of climate change. So what are the eligible assets, to make it sort of green? Eligible assets are defined as climate bond standards certification. So they need to get that kind of certification, the CBSC. They can be solar parks, biogas plants, wind energy, ambitious energy efficiency, renewable transmission and infrastructure, electric vehicles and infrastructure, light rail, or could finance government green payment subsidy. Malaysia, again, had issued the first green Sukuk in 2017, with Indonesia following. And other regions issuances have been small, basically. Green bonds and green financing continues to be a young and small industry in the GCC and other jurisdictions such as Turkey and Pakistan. The key challenge in the structuring stage for a lot of those issues having sufficient assets that are considered or deemed to be green to invest the proceeds in. Currently, for majority of deals, green bonds or Sukuks do not need to rely on green assets to generate the income or principal for prepayment. The key is that the proceeds have to be compliant with the standards that qualify them to be green bonds or Sukuk. Therefore, the question is whether a lot of state-owned entities and regional corporates have the necessary requirements to be able to raise such green finance. Therefore, projects and verifying that they all under the categories that investors are looking for can be a challenge in the structuring process. Identifying investors, most of whom are outside of the region and issuers, is a challenge again. The lack of pricing incentive for issuers, particularly from the GCC, have hindered Sukuk, green Sukuk issuances. The other thing that is linked with green Sukuk is in certain jurisdictions such as the GCC, there is no tax incentive for issuing green Sukuks, and therefore it is we don't see the demand or active demand for issuances. However, we've seen some sophisticated investors going for green sukuks because it attracts, it taps into investor base that are away from the typical investor base of those issuers. The Islamic Development Bank have issued the first ever green sukuk for a major entity last November. They raised about €1 billion in a 5-year trust certificates under 25 billion trust certificates program. The sukuk were priced very, very thinly at 0.037% because IDB is AAA. The sukuk market, currently remains concentrated on core Islamic finance markets of the GCC, Malaysia, Indonesia, and Turkey. So the total sukuk issuance, as we just mentioned, is about 130 billion. Last year, 6% from the previous year. The complexity and the higher costs associated with sukuks issuances has been the driving force for issuers to including sovereign and corporates and financial institutions to issue conventional bonds. So, in other words, sometimes the requirements to identify the assets and to do the structuring and the documentation and associated costs with it made a lot of issuers sort of swayed away from issuing sukuks. And that brings us to the next point, which is blockchain, basically, sukuks. Unlike traditional bonds that are debt instruments with interest component, sukuks are tradable instruments based on profit-sharing model, much like stocks, as we just mentioned. There has been a couple of very interesting sort of issues. One out of Indonesia with the microfinance cooperative called BMT, Bina Ummah, which has raised 710 million rupiah. It sounds a lot, but it's not. It's $50,000 through world's first primary sukuk issuance on public blockchain, and it's the world's first micro sukuks. Again, size matters. We always talk about benchmark issue, and when we talk about a benchmark issue, it's $100 million for any sukuk issue to be feasible. Otherwise, any smaller issues becomes a little bit too costly. With blockchain sukuks, that's possible now. The issue is basically the issue of the first sukuk is open source blockchain by fintech startup, also another one out of Dubai called WESIF, which was issued in December 2019 under the supervision of DIFC, the Dubai International Financial Center, which uses technology which could make sukuk cheaper and easier to issue. Fintech sukuks will drive standards, okay, and cost efficiency and growth in the sukuk market, which will support Islamic Bank's profitability. Smart sukuk platforms remove the conventional barriers to social impact investing by making micro investments feasible, transparent, and ultimately tradable. This is like it's like the same thing when you look at what container freight has done to cargo, and logistics. After the invention of the container freight, it reduced the cost considerably, which brought global commerce within reach, and virtually anyone. In the same way, the tokenized assets reduce intermediary costs, which makes global finance more accessible, regardless of size of borders or borders. Bluesome Finance, which introduced the Smart Sukuk platform last May, is hoping to standardize and automate legal, accounting, and payment aspects of the bonds or the Islamic bonds. And the platform utilizes basically standard smart contracts to increase efficiency and reach of Sukuk's issuance globally. So it just tells you, where is the trend going for the Sukuk issues. Blockchain can help reduce costs and increase speed by streaming processes and eliminating redundancies that would help narrow the yield gap with conventional banks. The costs and time involved in issuing Sukuks are currently greater than for conventional bonds. The use of blockchain technology in Sukuk is expected to facilitate growth of Islamic Sukuk market, allowing issuers of conventional bonds to be more easily tapped with liquidity available in the Islamic finance space. It's aimed to improving the market infrastructure to support the issuance and trading of Sukuk securities. It will make Sukuks more accessible by digitizing the costly and lengthy manual issuance process. The World Bank also did a trial with blockchain bond issue of 81 million in August last year. So this just tells you where the Sukuk market is going, and it's really fascinating, very interesting to see, the growth going into even a different and a new phase, basically, and becoming much more accessible. The other thing that I wanted to share with you is that, not only sort of the usual suspects of issuing countries, Malaysia, Qatar, Saudi, Indonesia, Turkey, Pakistan, and so on and so forth. We've seen now new frontiers. South Africa is considering new Sukuk issues, and RAND, which was just talked about today. They had issued one in 2014 for 500 million for almost 6 years sort of Sukuk issue. Hong Kong is considering refinancing their existing Sukuk issue. The UK, they have repaid their inaugural 200 million Sukuk, and now they're considering new Sukuk during this year. Philippines, they have issued a memorandum circular containing guidelines for issuance of green Sukuk last year. Ghana is looking to do an issue. Sri Lanka is exploring the possibilities. So the market is expanding, and we're seeing new issuers coming into the market. And this just tells you that the Sukuk market is gaining acceptance, legitimation, and becoming part of the mainstream. And the scheme of things, when we look at the sort of the overall market size, Sukuk is still relatively small in terms of size of the total market. But it's a market that's really growing. So, this is my last slide. I'm not going to take a lot of your time. Where are the opportunities? Of course, the opportunities with the Sukuk market, because now we see lower interest rates, which encourages many issuers to come and refinance or do new issues. The GCC, Malaysia, the Southeast Asia, they represent very interesting sort of markets, because with rated issues, issuers in this markets, we pay a little bit of a premium. So we get a lot of investors who are looking to hunt for the yield. And therefore, for example, the latest Saudi bond issue was almost nine times oversubscribed, basically. Cheap global liquidity, improving we just talked about the blockchain, this blockchain Sukuks, which improves the standardization and adaptation of fintech. Good fit with green finance, healthy new issue pipeline. The inclusion of the GCC in the JP Morgan Emerging Markets Index makes the issues, the issuances that are generated by primarily the sovereign issuers, very attractive, and many investors would be coming in. So we've seen, they're expecting like an increase of demand of around, I can't really remember the figure offhand, I have it somewhere, but it's a substantial increase in the demand for just by virtue of including the GCC Sukuk market into the index. And there's opportunity to benefit from the M&A activity in the GCC. We're seeing a lot of consolidation. So and Sukuk can help in raising some of the funding for some of the M&A action. Where are the challenges? Now, COVID-19, we're getting into a recessionary period. Growth is expected to be around the 2 and 3% from the 4 and the 5% growth rates in the past. So slowing down. Risk of fallen angels. I know we have some participants from Bahrain, and Bahrain and Oman, in my view, are countries that could face with the high level of debt that they have accumulated over the years. I hope we don't see a fallen angel going into default, and looking at sort of some of the support schemes that have been introduced by neighboring countries to help shore them up. Both countries are below investment grade. So this is a risk of fallen angels. Geopolitical concerns in the Middle East, we don't need to discuss much of that. We see that on the news every day. The subdued outlook for oil prices. We talked about the drop in oil prices of around 50% since end of last year. The average price expected during this year would come to around $35. That should be okay. But again, that's all. $35 is below any the assumed oil price for all the GCC-based budgets. Kuwait and Qatar 55. Saudi and Bahrain, they're around 60 something, and so all of these budgets are north of $35. So definitely, there's going to be a widening deficit in those budgets. The challenge, again, we just talked about, is the complexity and the higher cost of doing sukuks as opposed to conventional bond. Sharia prohibition on speculation hinders the hedging long-term risks, which basically becomes a bit of an issue with longer-term sukuks. And the duration constraints we just talked about, that sukuks are predominantly sort of within the 5 and 10 years space, basically. So, which is a restriction on issuers, which we hope with time, and the development in the products, Islamic finance products, will help to push those boundaries further and further. With that, I hope I have basically come to the end of my presentation, and I'm very much happy to take any of your calls, any of your questions.